Next is 14-21 Tara Company. So you have two accounts, rent receivable and unearned rent income. So one is an accrual, accrued income, the other one is a deferral. So beginning balance for rent receivable is 960,000. It's an asset, so it's on the debit side. Ending balance is 1,240,000. For unearned rental income, it is a liability account, so beginning balance is on the credit side, 3.2 million. Ending balance is 2,400,000. And then here you have a write-off amounting to 500,000. So write-off, written off account will be written on the credit side of the receivable account. And then you have 8 million cash receipt. Okay. So question, where do we put 8 million, on the debit side or on the credit side? So as I have said, imagine receiving 8 million. If you have a rent receivable and you collected 8 million or you collected something, what would be the journal entry? Debit cash, credit rent receivable. Okay? Or if you want to relate it with unearned rent income, you received cash in advance, what would be the journal entry? Debit cash, credit unearned rent income. So if you will notice, every time cash is involved, these accounts are credited. That means 8 million should be written on the credit side because it relates to a cash receipt. Since we're looking at for rental revenue, it follows we can locate it on the opposite side. But if you want to have an analysis, if you recognize revenue, the journal entry would be debit rent receivable credit revenue. Or if you want to relate it with unearned rental income and you were able to provide the services, that would be a debit to unearned rental income credit revenue. So if you'll notice, if you're looking for a revenue, these accounts are debited. That would mean you can find the revenue here on the debit side. So you compute for the balancing figure, that's 500,000 plus 1,240,000 plus 3.2 million plus 8 million minus 960,000 minus 2.4 million. That will give you 9,580,000 letter. That's letter B. Again, just to remind you, this formula or method is not mandatory. You can follow any methods you're comfortable with. The next problem, we move on to the final classification, those problems which require a deeper analysis or basic comprehensive understanding. So you can solve these type of problems by understanding the problem. Okay, so there's no specific formula or problem. If you cannot understand the problem, then most likely you would not be able to get the correct answer. So we'll start with 14-7. So on February 1, 2019, Tori began a service proprietorship with an initial cash investment of 200,000. The proprietorship provided 500,000 of services in February and received full payment in March. The proprietorship incurred expenses of 300,000 in February, which were paid in April. During March, Tori drew 100,000 against the capital account. So the question is, in the proprietorship's statement of financial position on March 31, 2019, take note of the date, March 31. What amount should be reported as capital under cash basis of accounting? So under cash basis of accounting, we only recognize income when cash is received and recognize expense when cash is paid. So same as any proprietorship, we start with the initial investment of 200,000, beginning balance. Then you have income 500,000. Take note the services were given in February, but they were the proprietorship was able to collect in full March. So you add 500,000 referring to income. For the expenses, you have 300,000 incurred in February. However, they were only paid on April. Our cutoff is March 31. Since this is cash basis of accounting, we're going to disregard the expenses. And then lastly, you have a withdrawal of 100,000 by the proprietor. So you have 5,700 minus 100,000, 600,000. Answer is letter C. That's letter C. So next problem is 14-8. That is Reed Company. So Reed Company, which began operations on January 1, 2018, has elected to use cash basis accounting for tax purposes and accrual basis of accounting for the financial statements. The entity reported sales of 1,750,000 and 800,000 in the tax returns for the years ended December 31, 2019 and 2018 respectively. The entity reported AR of 300,000 and 500,000 for December 31, 2019 and 2018 respectively. So what amount should be reported as sales in the income statement for the year ended December 31, 2019? So we just prepare an AR account. So beginning balance of AR is 500,000. Be careful of this one. If you'll notice, the given was not the given were not provided in a chronological order. So 500,000 as the beginning balance and 300,000 as the ending balance. And then you have entity reported sales in the tax return as provided in the problem. In their tax return, they're using cash basis of accounting. So this reported sales refers to cash receipts. So cash receipt for 2019 is 1,750,000. Cash receipt meaning collection. So 1,750,000. We're looking for the credit sales. 750 plus 300 minus 500,000. The answer is 1,550,000. So letter B. The next problem is 14-18. That's Ash Company. So you're asked what amount should be reported as advertising expense for the year December 31, 2019. So you're given with 990,000 and then an additional information. So bullet number 1, radio advertising spots broadcast during December 2019 were billed to the entity on January 4, meaning they have already incurred the expense during the year 2019, but they were only able to receive the billing on January 4, 2020. The invoice cost of 50,000 was paid on January 15, 2020. So because this expense refers to the expense incurred during 2019, this should be added for the current year's advertising expense. Second bullet, included in the 990,000 is 60,000 for newspaper advertising for a January 2020 sales promotional campaign. So included in 990,000 is a payment concerning an amount that will be incurred next year. That means this is still a prepayment. Because it is still a prepayment, you don't have to include this as expense for the current year. So you need to deduct this one and recognize an asset or a prepayment for this. So that's 990,000 plus 50,000 minus 60,000. You will get 980,000. That is letter B. So next problem is 14-19. Last problem. The rest of the problems, I will leave them to you for you to solve it and practice yourself. So you have 490,000 is the compensation expense of Doran Company before considering the following information. Bullet number 1. No salary accrual was made for the week of December 25 to 31. Salaries for this period totaled 18,000 and were paid on January 5, 2020. Because it was incurred still within 2019, this has to be added 18,000. Next, bonus for 2019 was paid on January 31, 2020, total amount of 175,000. Because this bonus relates to a 2019 expense, this should also be included in the compensation expense for 2019. So all in all, total expense that Doran Company should report is 683,000, and that's letter A. So that ends our discussion. If you have question, you can post it in our group or ask your class representative to post it for you.